Hello everyone. Welcome to another interactive session from AKC Capital. My name is Adietya K Chopra. I'm the founder and CEO at AKC Capital. And this time we'd be covering the GIFT City framework, especially the inbound investments. Pleasure to have with me Mr. Vaibhav Shah. He heads the GIFT City initiative with Mirae Asset Investment Managers and heads the India practice.
So, thanks Aditya.
Yeah, so thanks for coming on this session. So my question number one, Vaibhav, would be is that how do you see the architecture of GIFT City framework vis-a-vis inbound investments?
Sure. Thanks, Aditya. So let me start with basically what is GIFT City, right? Yeah. I'm sure a lot of people would have heard GIFT City and would be wanting to know more about it. So GIFT means Gujarat International Finance Tech City. Right. It is India's only approved IFSC, or in simple words, India's only approved central SEZ, through which a lot of investment framework has been created to attract foreign capital to come into India. Now, what makes GIFT City unique compared to other jurisdictions is, though GIFT City is technically part of India, it is located between Ahmedabad and Gandhinagar. Right. From a FEMA perspective, it is considered a jurisdiction not in India. Right. And hence, when you transact through the GIFT City route, you are essentially investing in foreign currency. Right. Hence, in GIFT City, about 15 currencies are allowed to be traded, including dollar, pound, sterling, Japanese yen, dirham, etc., to be traded. And because GIFT City is not part of India, technically any sort of transaction you do through the GIFT City is in foreign currency. Okay. And for distributors, it's actually considered as an export of service. So it's a sort of very different way to look at things. Second is, what makes GIFT City unique is that we have one unified regulator who regulates all financial intermediaries to the GIFT City operations. So in India, you've got 4 regulators. You've got RBI looking at banks and NBFC. You've got IRDA looking at insurance, PFRDA looking at pension, and SEBI looking at capital markets, including brokers, AMC, etc. However, in the GIFT City, there is one regulator called as IFSC, and this regulator oversees everything from banking to capital markets to insurance to pension. Now, this makes the sort of way of investing through GIFT City very easy because you have one regulator who looks at the entire ecosystem, and the idea of the ecosystem is to make it easy for foreign investors to invest into India. And specifically to your question, see, if we see a lot of investments which come into India come from jurisdictions like Singapore, from Cayman Island, Luxembourg, Dubai, etc. Now, the idea of GIFT City is, why should foreign money, which is investing into India, come through some of these routes? Right. Why shouldn't this money come directly into India? Correct. And that was a genesis of starting GIFT City, is to attract foreign capital to come directly into India, so that the best investment managers sitting in India can provide the experience to global investors. Also, GIFT City gives the flexibility to Indian managers to also invest globally. Okay. So it's a complete way for global investors to invest into India and resident investors to invest globally. All sort of options are available through the GIFT City.
Excellent. No, thank you for the input and very insightful. So specific to inbound investments, my next question, which audience may want to know, is that probably what would be the the categories of funds, especially a person who is investing from overseas into Indian markets. What would be the broad categories of funds available? That could be one question which comes to my mind. And generally, when you're looking at inbound investments, do you see any specific advantages which you want to highlight?
Sure. Thanks, Aditya, for highlighting this. So basically, when it comes to inbound investing, the idea is to get NRIs stroke foreign nationals to invest into India. Now, what type of products are allowed? Because the underlying is all related to India, and that's why it is sort of called inbound fund, because the money comes into India. You can do multi sort of asset classes. So you can have listed equities, you can have ETFs, you can have stocks, you can have mutual fund as underlyings, you can have fixed income instruments as underlyings, you can have unlisted venture capital companies as underlyings. So the entire basket of products and asset classes are open for NRIs stroke foreign nationals to invest. In fact, NRIs and foreign nationals can also come through the GIFT City route to invest in global stocks, global funds, global ETFs as well. So it doesn't only restrict them to invest into India, it allows them to do outbound investments, which is also investing in global markets like US as well. So that's the sort of two categories which of products. One is inbound, which comes into India, and the second is outbound, which allows investments outside India, which could be there and across multiple asset classes. Third category, which can be a very interesting category for investors, is a lot of securities will eventually get listed in IFSC. Currently, GIFT Nifty is one of the most highly traded security which is available on the GIFT exchange. Similarly, a lot of companies will also be listed on the GIFT exchange. A lot of bonds will also be listed on the GIFT exchange. This will allow NRIs and foreign nationals to buy dollar denominated Indian securities and sell them in dollar basis. So you can invest in dollars and exit in dollars. So a very easy way for investors to come and exit into India, and that will be the third opportunity which will come in coming times. On your second question, Aditya, which you had asked, is what are the advantages GIFT City provides to NRIs and foreign nationals? So typically an NRI or a foreign national, when they invest into India, have typically four large challenges. One is documentation and KYC.
I agree.
Right. Now, NRIs and foreign nationals are essentially not living in India. And if you tell them to take a PAN card or do PAN Aadhaar linking,
I do understand.
Then it's very cumbersome for them to do it. The advantage GIFT City gives you is PAN card is not a mandatory document for you to invest into GIFT City products. So if you don't have a PAN card, just give a no PAN declaration and you can invest. Second is the sort of documentation process is fairly simple and a single ID proof or an address proof is required for an investors to start investing. So in most cases, a passport can be the only document required to start investing. So the KYC documentation is simple. Now the second is repatriation and remittance. Now what happens in NRI when he wants to invest in India, sometimes when he transfers money, he has challenges on questions asked on the repatriation of the money. Now the money can come from any bank, can come from Bank of America, Bank of Singapore, Abu Dhabi Commercial Bank, Mashreq Bank, any bank in the world, and can go back to that same bank. So the no questions are asked on money coming from a foreign bank and going back to that same foreign bank. So there is complete ease for an investor to transfer money, and restriction is NRI cannot invest NRO funds, but he can invest through the FCNR funds or NRE funds or even the money lying in his foreign bank account. Now any NRI living outside India for more than a decade has large part of his wealth in dollars. And he would want to invest in dollar terms or foreign currency, and GIFT City gives you that flexibility of investing in dollar terms. Third advantage which is there through the inbound route is taxation. Tax is one of the large advantages which is there. So when you invest through a GIFT City route, then tax filing in India is not mandatory.
Oh, that's a big advantage.
That's something which NRIs sort of always are fearful that do I need to disclose my investments to the tax authorities. So tax filing is not relevant, and there are certain structures which you can create in the GIFT City which are through a fund of fund route, which are completely exempt from tax in India. So NRIs can take advantage of that route to invest in underlying mutual fund units without any incidence of tax. So that's a beautiful advantage of taxation. And I think so last advantage which I think so they get is that they can invest in dollar terms. Now it's very easy for a foreign national or an NRI to invest in dollars and take back money in dollars. The currency conversion risk is taken by the fund. Of course, because they invest into Indian instruments which are denominated in the INR, currency risk cannot be fully mitigated, but the currency conversion cost, which is a large cost for investors, can be mitigated to a large extent. These are four large advantages NRIs and foreign nationals have when they invest into GIFT City products.
Well, I think for our audience, that's a wealth of information, and Clearly, I think a few points stood out clearly, and let me reiterate those points which came in the conversation. I think one is, I think, the diversity in the underlying. It could be an architecture you can set up. You've brought out a distinct tax advantage when you're investing with underlying as mutual fund units.
Sure.
And you can have also you talked about dollar denominated bonds and other asset classes where dollar investments would be coming in. So clearly there is a distinct diversity in terms of the underlying which could be of various asset classes, equity and fixed income over time.
Right.
Currently, obviously, we are looking more on the equity side as it's coming forth. And I think the tax advantage clearly pointed out when investments are done in the underlying mutual fund units, right? You've also brought out very clearly that obviously, the KYC and the documentation, ease or simplified, so we know, so you just use a passport or maybe, that's the only thing you require. There is no,
address proof, ID proof.
or an ad don't have to disclose to IT authorities in India. You just get your money in, and typically, the incidence of taxation will be as per the domicile home country. So I think these are some things which I'm sure investors are taking away as we have this conversation. Which brings me to the other point. I think traditionally, in my 20 years in banking and wealth management in India, I've seen obviously a larger architecture has always been woven around, mutual funds. That's always a starting point in any investment portfolio. And obviously, as clients build their portfolios, we've moved across to alternate assets, PMS, and private equity funds. But the starting point is always the MF. So for investors here, when you're looking at especially inbound investments, specific to mutual funds, if I can calibrate my question, would there be any kind of pros and cons out there? Because if I'm let's say a client overseas, I can always invest in mutual funds using my NRE account, income earned overseas. But any specific advantage vis-a-vis mutual funds that you may want to point out?
No, Aditya, you rightly pointed out mutual funds are the most transparent, best ways to invest into Indian markets. Because of the transparency, the cost factor, the expertise of fund management which is there on the mutual fund space. Now the idea of GIFT City and some of the products that we've also launched and is to provide you the same flavor of mutual funds through a wrapper fund of fund structure route. Now what happens in GIFT City is, like I said, the idea is to attract not only NRIs but foreign nationals to invest into India. And if you want NRIs stroke foreign nationals to invest into India, you have to have a ease of the way that you do the system. Now the advantage that I would believe that is there is that if you create a AIF fund where the underlyings are mutual funds, then as per the income tax laws in India, there is no tax incident which arises to the AIF fund. And hence investors need not pay any tax in India. Otherwise, traditionally, when an NRI buys and sells mutual fund,
there would be anything.
There is an incidence of tax, and they have to rely on DTA agreements, and hence they have to file TRC, they have to file 10F form, they have to do income tax filing in India. So there are a lot of challenges which an NRI has to ensure that no taxation arises in India. While this can be completely mitigated if it comes through the CAT 3 AIF route through the mutual fund as the underlying investments. What we've also tried to do in some of the products or ideas in the product that we've launched is to keep underlying as mutual funds but create a very dynamic manner in which you can change underlying mutual fund schemes. So what happens is there are times that large cap fund might do well or mid cap segment of the market will do well or certain sectors will do well. But for an investor, it is very difficult to know when to invest in large cap, when to invest in mid cap, or which sector to invest in. So the idea that we've tried to do in our product is to create a dynamic way. Investors can, the fund manager does it on behalf of the investor, can dynamically change the allocation between large, mid, small and themes. So the fund gives you a flavor of what we believe is the best investment opportunities in India with underlying as mutual funds. But dynamically changed based on real-time views on markets. And that gives you a flavor of markets in a complete way. You can get in one fund exposure to India and that too in a very tax efficient manner. So I think so this gives not only the transparency and the ease of mutual funds, but also gives you the added advantage of taxation and the dynamism that you can do while buying and selling mutual fund without taxation, but incorporating the current assessment of how much should be large, mid, small and sector views within the portfolio. These two advantages can make it very friendly for investors.
No, I think thanks for input there, and I think to reiterate a couple of key points, I think you've largely pointed out the flexibility of the underlying asset. I think the point we've seen across as this whole architecture evolved, we've seen funds which are focusing in the GIFT City route on a certain market cap, large, mid. But I guess we've seen a lot of evolution of funds and where you have the underlying across large, mid, small, thematic, and it's pretty much managed in a very dynamic manner. So if I'm an overseas investor, I know that okay, I've put in my 150K and it's being managed in a certain asset allocation.
Doesn't restrictive to I am investing only in mid cap or in small cap, because see what happens, Indian market is very volatile, dynamic. So some pockets of the market will become expensive, some will become cheap. Idea is, can you tap that as quickly as possible? That can help generate slightly better alpha or returns for investors if the calls go right.
I think that's a great part, and obviously the tax advantage which we and as I speak to a lot of my overseas clients, I think emerging markets has its own compelling story, and I'm sure clients would like to participate through this initiative. So which brings me to the the other question which our audience may be looking at is that right now we've talked about, just as a quick recap, we've talked about the categories of funds, the advantages. We broadly dwelt on the risks as well. Mutual funds, yes, we talked about. One forward-looking question which the investors may have is that GIFT City theoretically is in a nascent stage. It's an idea which has been developed over the last probably a year and a half, and so and you can understand to a large extent it's a government's initiative to draw, get more dollars in the economy. So how do you see the assets under management within the GIFT City framework, especially vis-a-vis inbound, growing over the next, let me say, in the short, medium and long term? And my long term would be probably, I'm looking at over the next 10 years, which is fair enough. But how do you see the roadmap, let's say over the next 5 years? How do you see this landscape growing and evolving, both in terms of AUMs, in terms of ease of investments, more in terms of, and obviously support from the regulator? I think if these three, that would be a good way to get a forward-looking perspective.
No, fair point, Aditya. I think so, like you rightly pointed out, this is the initiative from Government of India. So the focus is right at the top.
Correct.
To make this large. The reason being simple: if India wants to manage India's money, why should it come from jurisdiction outside India?
Right.
When the best fund manager talent is in India, and the fund management team can be in regular touch with the underlying investors, the companies that they invest in. So the research quality which is there in India is completely different from a global sort of manager sitting outside with a manager outside not meeting companies on a regular basis. So idea is to attract capital with the best talent here in India. So the government focus is large. The regulator IFSC is one of the most forward-looking regulators in I would say the jurisdiction that we and multiple jurisdictions that we look at, and GIFT City is also modeled a lot on Singapore, which is a well-regulated market. So the idea is, can we pick the best practices of Singapore and bring it to India? So on taxation, from ease of doing business to making it easy for investors to come and go into markets, regulators had looked at all of this, modeled on the best markets, brought those practices to the GIFT City, and like I said, in taxation, the idea is no jurisdictions ideally should have a taxation better in than GIFT City. So the idea is, can we attract foreign capital with ease of investing and a lot of advantages which foreign funds don't have when they invest into India. They have got limits issue of 5149. Here, 100% of the money can come even from NRIs. All these exemptions are only for GIFT City funds. Third, I would say on your point on What is the roadmap? GIFT City is already moved, or IFSC is already moved amongst the top 50 jurisdictions globally, and seen a very, very fast growth. The acceptance from a lot of jurisdictions has become very high. So a lot of jurisdictions have already recognized IFSC as a jurisdiction, and said that if funds are invested, if investors invest in funds launched by the GIFT City, it would be okay for their investors to invest in. So the framework is easy, and you have the Indian law, which is a overriding jurisdiction to look at. The law part in case there is a sort of dispute within the GIFT City sort of investment framework. So I would say the idea is to make it easy for investors to come and enter into India or exit into India, and a large number of sovereign wealth funds and institutional investors are also setting up shop here. So I think so the roadmap is maybe over the next 5-10 years, this can become significantly a very large jurisdiction and can grow significantly in size and scale.
And do you want to peg a number to the AUM roughly?
Very difficult to say what.
But I know it's
number,
a tough question, but roughly.
I wouldn't. It wouldn't be surprised if I would say maybe 25% of the foreign money, which comes from other jurisdictions, actually start moving to the GIFT City over the next 10-year period.
Excellent. I think that's a key takeaway. So I think thanks for your input on this. I think in this short Q&A which we've had, I think we've covered various facets of the inbound investments.
Sure.
And for investors, we wanted to keep this a short and crisp session so that you get a larger perspective of inbound investments. So just as we wrap this up, my quick takeaway as AKC Capital, basically as a wealth management firm, I think it's important that while this is a great initiative by the government of India for inbound investments, you do the right asset allocation for your clients, understand the risk profile, the investment horizon, so on and so forth, and then talk about underlying investment options. So I hope all of you enjoyed this session and you've taken some good knowledge bites out of this. On behalf of AKC Capital, I just want to extend a warm thank you note to Vaibhav Shah once again for taking out time out of his busy schedule for this session, and look forward to getting more knowledge bites from you in future. Thanks once again. I hope you found this useful. Thank you so much.